All right, folks. Welcome to the live stream. Just getting set up here on my end. What's up, everyone? How's everyone doing? Hope everyone's having a good time. Panic buying and FOMO buying and panic selling. How's everyone? I see Nick first here. Welcome. Yes. Alex, yo. Other Alex, what up? What up, everyone? Damn, yes, we are out here indeed. Buy now, cost average 100%. Look, guys, I'm still degen buying, and look. I mean, there's a lot to talk about, right? A lot of people are freaking out that Bitcoin had a little bit of a tiny correction today and yesterday. I mean, let's see how much we're down since our first semi-relief rally here. We're down, oh my god, a whopping 16%, folks. It's time to panic sell, time to completely get out of the market. We were all wrong. Crypto's a Ponzi scheme. It's not here to stay. I'm out. I have, in fact, panic sold everything, and I'm buying Doge on the dip. That's definitely not what I'm doing. If I ever do indeed do that, then I've probably been kidnapped and I'm being held against my will. So, guys, there's a lot to talk about in today's market. Messin is not here. He was very busy in France gem hunting. I sent him out on a mission. I was like, yo, listen, I want more low cap gems. I want more high probability setups. He's like, I got you. So he's now out in France hunting, mining, just looking for kind of low cap gems to share with you. Also, hopefully in a later live stream, we'll get the chance to do that. But for now, guys, I kind of want to break down what's going on with Bitcoin. Talk about some major news events that happened recently, some kind of off-chain indicators that I think we should be aware of. I also want to talk about some of the stuff I'm buying and why I'm still buying. And also, I want to address what it would take for me to say and think that we're entering a bear market. Because at this point, I'm still unconvinced. I'm not ready to call it one way or the other, whether we're still in a bull market or we're entering a bear market. I'm still not convinced. So I just want to share with you guys some of the things I'm looking out for that would lead me to be convinced that we're entering a bear market or still in a bull market. So, folks, if you like the sound of that, do me a favor, like, subscribe, comment, share, hit that bell icon, notified of new uploads. I know you guys here already probably subscribed, but smash that like button. What are you guys saying here? You guys saying? Gerber and Nigel says, is it a good time to buy MATIC? Well, it depends. Depends what you're trying to do. Depends your investment time horizons. Depends your risk tolerances. Depends on a lot of stuff, bro. So I can't tell you if it's a good time to buy or not. What I can tell you is, would I be buying right now? I would honestly say no, because while I do love MATIC Polygon a lot, we recently just fell below support and the market is still looking precarious, and we are on the weekend, and weekends are typically bearish for crypto. So come maybe Monday, if we see a recovery, if we can flip resistance to support, get above $1.80, start to look a bit stronger, then I would be more confident of the uptrend and of the recovery. But right now, freshly broken below previous support, I wouldn't be buying MATIC. Where I would be buying MATIC is anywhere from $1.20 to about 95 cents. That's where I would be buying. Not financial advice, but again, we just broke below support. I think $1.20 to about 90 cents, even 80 cents is very, very realistic for MATIC Polygon. So I would definitely be chasing dips, not pumps. Although we have been dipping as of recent. But let's not delve quite into Polygon quite just yet. Let's talk about what's going on with Bitcoin. And yes, I see a lot of you guys talking about VECHAIN. I bought Refinable for Binance NFT release for June, so cheap. Yeah, I actually purchased some Refinable myself to become a liquidity provider on Binance Smart Chain. Great ROI. I think they're paying I think it's just under 200% a year for becoming a liquidity provider on Binance Smart Chain through Refinable. So maybe I'll share some staking opportunities that I'm looking into. Because here's the thing, I've been talking to our VIP Discord members, and I think if more than one person at this point brought up let's if we assume the worst case scenario, what's our strategy? Like, if let's say we are entering a bear market, what are we to do? And so one thing I'm going to do is I'm going to take some profits on some of my positions and probably stake them. So when it comes to how am I, implementing risk management, well, next relief rally we get, I'm going to take some profits on a minority position of my portfolio, and stake stablecoins and become a liquidity provider. So maybe later down the live stream, I'll share with some of those opportunities, because there's some gorgeous opportunities. Opportunities I've been sharing with our VIP Discord members. One of which is this opportunity with SushiSwap and Polygon right now, specifically where Polygon and Sushi have this partnership where if you become a liquidity provider, you can earn interest, and on top of that regular interest rate, Sushi and Polygon. So it's a double whammy. And there's even like a much less risky approach to liquidity providing, specifically through SushiSwap, that maybe I'll share with you guys later in the live stream. But before we really delve into that, why don't we kind of update ourselves on what's happening with Bitcoin? Because again, Bitcoin leads the market. We got to know what Bitcoin's doing, because if Bitcoin goes down, the rest of the market goes down, especially right now. So again, guys, if you don't know me, I own 0 Bitcoin, because I think Bitcoin is a rather silly investment when you have literally thousands of other options of cryptocurrency. But with that being said, Bitcoin does completely the market, so we need to understand what it does. And Bitcoin, honestly, if you understand what Bitcoin's doing, you know what the rest of the market's doing. So right now, what we've been seeing, and what I was letting our VIP Discord members know the other day, is that we were in this wedge pattern. I actually let all our members know the other day that we're in this wedge pattern, and that I was expecting an explosive move within the near future. And we did indeed get it. We broke below our volume here at kind of $38,000. We broke below our wedge. And so what are we seeing right now? I bet you anything, we're just going to move down the height of our wedge. So if we take the height of our wedge, move it to the breakout point, that's roughly about what we fell to. And Bitcoin could even fall a little bit further. And as long as we still respect this green trend line, then it's all good. And this is a totally normal to be expected move. Nothing out of the ordinary. In this wedge breakdown, we might just be retesting this green support line. Very, very to be expected. Nothing out of the ordinary. I saw a few people panicking earlier because of this downtrend, and I personally don't get it. But hey, everyone is their own unique snowflake. So, folks, a few things. We are breaking down. We're currently testing this 0.5 Fibonacci retracement. Let me just, yeah, it is the 0.5. And I see a lot of stuff right now testing the 0.5 Fibonacci retracement from cycle bottom to all-time high. That gives us some fib levels that are likely to act as support and resistance. And we've kind of been messing around these regions, but it seems like we're breaking down. It seems like we can't hold it as support. So what I'm looking out for is literally just a retest of this green line. Where I start to get worried is if we start to fall below 32,000. Again, guys, like I've been saying on the channel for days, if not weeks at this point, there is tons and tons and tons and tons of resistance above us. It's honestly nothing surprising that we didn't break through the first time we touched it. Like this super strong resistance, when the market's this shaky, I mean, people were freaking out saying, oh no, this is such bearish confirmation, this is the end of the world. No, I wouldn't have expected it to broken through like these EMAs the first time. They're very very macro levels. I would expect us to test it a few times and then break through, not immediately. So for me, guys, to kind of answer the question of what am I looking out for to understand whether we're in a bull or bear market, it's honestly very simple. And again, I want to keep hammering home these tangible points because I'm on crypto YouTube as well, right? Like crypto YouTube is how I first started learning about cryptocurrency. And so I hear a lot of people talking about their feelings and their intuitions. And to understand whether we're in a bear market or if we're in a bull market, there is no need or very little need to talk about feelings and intuitions. What we need to look out for is tangible, real-world evidence and confirmation. Again, guys, I'm not confident right now to call bull market or bear market because there's just tons of conflicting reasons right now. So I think what we need for clarity is further confirmation of the trend. So if we start to break down bearishly below this green line, that would serve as bearish confirmation. If we start to then again break below $30,000 and make a new lower low below $30,000, that is bearish confirmation. And if we break below $30,000 again, at that point for me, I think I would maybe start getting to the point where more than 50% of the evidence that I'm seeing is pointing bearish rather than bullish if we make that new lower low below $30,000. So in my book, because there's so much resistance, we can get rejected all long day, and that makes sense to me. What would serve as bearish confirmation is a breakdown below 30. So as long as we can hold this green trend line, as long as we don't make a new macro lower low, I still think that there's a possibility that we may be bottoming out, that we could have a V-shaped recovery, and that this could have been a local bottom, as long as we hold 30,000 and don't make a new lower low. If we do make a new macro lower low, that would vastly increase the likelihood that the macro bearish trend continues and that we could be entering a bear market. And if we did make a new lower low below $30,000, that still wouldn't be the complete end all be all, and there would still theoretically be some hope. But I think a breakdown from 30,000 would be enough confirmation that for me, I would start leaning more bearish than not. Right now, I'm kind of neutral. Right now, I'm kind of waiting on the sidelines, waiting for more evidence, waiting for more confirmation to be more confident of the macro direction. So if we break below 30,000, for me, that would be confirmation of the macro bearish direction. And so if we do see that, I'm going to wait for a relief rally and start taking profits in some of my altcoins. Until then, I'm fully degen buying. I'm buying the dip on literally as much Gucci shit as I could. And while I breaking below 30,000 would seem doom and gloom, I also want to share with you guys right off the bat why I'm still buying. So I see someone here in the chat saying, Sunny Lou Burner says we're heading into a bear market. And look, guys, there's a lot of good reason to seem concerned. The trend here in the short term is very, very obviously bearish. All right, guys, like there's people can come up with endlessly complex ways to say that this is bearish. It's very simple. The trend, we're making macro lower lows and lower highs, breaking below critical support, having abnormal sizable corrections. A lot of people, that market sentiment's bad. And look, there's 1,000 ways how you could describe how this is bearish. It is indeed bearish. But in times like this, it's very key to understand not just technicals but fundamentals. Our hope in making this channel is that we can bring you guys the best combination of fundamentals and technical analysis. Because technical analysis is great for understanding the short term, what's going to happen within the hour, the day, the week. But fundamentals is what's tell us what's possible long term. And the fundamentals for Bitcoin and crypto never been better. It's just the technicals that are kind of shitty here in the short term. So, with that being said, guys, I am buying the dip on a lot of stuff. And the reason why I'm buying the dip on a lot of stuff is pretty simple. We have been seeing 50, 60, 70, I believe with VECHAIN, we saw like an 80% correction from all-time highs. So if we measure from all-time highs to 83%. So these are the kinds of corrections we see in a bear market. So the worst of what's theoretically possible already happened with like most of the market. I don't know what's for sure, but I bet you most altcoins are probably down more than 50% from all-time highs or around there. So the worst of what's possible in a bear market already happened. That we have that fact paired with the very real possibility that we may still be in a bull market, that the bull market may be elongated, and that we could enter maybe a week, a month, a several month long consolidation phase like 2013, 2014, and then make new all-time highs later in the year, maybe 2022. Something like that, that's totally possible. The fundamentals for crypto have never been better. It's just the short term that sucks. And so given that there's the distinct possibility that the bull run may very well continue, and given that the worst of what's possible has already happened with a lot of altcoins, they're already down more than 50% from all-time highs. VECHAIN corrected 83% from all-time highs. What's the worst case scenario? Correction 90% from all-time highs? What's another 7% after an 83% correction? I mean, guys, given that there's, again, still a possibility that the bull run may continue, and these coins have corrected more than 50% from all-time highs, I'm buying the dip on solid coins. And if we assume the worst case scenario, bull run's over, we have to wrap it up, come back 2024, 2025, and the next bull run's likely to happen in 2025, then I think things like VECHAIN, things like Ethereum, things like Cardano, they're going to be around the next cycle. And so worst case scenario, I'm going to have to hodl what I'm buying now for years. And that will probably suck, not having, liquid money that you can buy the dip on and watching your unrealized gains fall. That probably will suck. But again, given that there's a possibility the bull run may continue, and if I'm buying the dip on solid coins, I have a good chance of recovering and surviving a bear market and making new all-time highs next cycle. I mean, if that's truly the recipe we're looking at, For me, buying the dip isn't so crazy. And look, maybe you have different risk tolerances than me. Maybe you have different investment horizons than me. Right now, I'm fully willing to hold everything I buy for the next couple of years. That will suck, but I'll do it. That might not be the same situation with you. Would you be willing to hodl something for years that had a 90% drawdown from all-time highs? It's going to be very difficult for a lot of people. So that's kind of my approach with how I'm looking at the market right now. We need further confirmation. I'm still buying the dip on solid altcoins because I think the coins I'm buying are likely to survive a bear market and make new all-time highs next cycle. And there's a possibility that we still may be in a bull cycle, maybe just have weeks or a few months of consolidation. So given that situation, and given how, how things have corrected 80, 70, 60% from all-time highs, worst case scenario is they correct another 10, 15% from all-time highs. The worst of what happens is already possible. So, okay, guys, at this point, I'm repeating myself. But look, to understand what we need to look out for, to understand if Bitcoin is bullish, if we're still in a bull run, is very, very, very simple. We need to start flipping major resistance into support. Our first major resistance zone is right here between, I'd say, $40,000, kind of $42,000, $43,000. Really, from this peak to this wick, or more specifically, the 382 Fibonacci retracement and the 200 exponential moving average on the daily and the 200 simple moving average on the daily. We've been getting rejected exactly off our 200 daily EMAs and SMAs. Here, we can see how price reacted exactly off the 200 EMA. Here support, here support, here resistance, and over here rejection once again. So what we need to breathe a sigh of relief, what we need to be more confident in the bull market is extremely simple. We don't need to talk about feelings and intuitions. We need to flip these two things from resistance into support. If we can do that, then that would be kind of the first layer of bullish confirmation we need to see to start to be a bit more confident in the state of the bull run. All right, once we can flip basically $42,000 from resistance into support, and not just wick above it, but like have a daily candle, 2 daily candles, a couple days fully closing above 42,000, then we can start to be a little bit more confident that we can make moves to the upside and maybe tackle some other resistance levels. So something to be aware of. I do think more of a relief rally for Bitcoin is still very much realistic, because again, even if we look back at 2017 and assume the worst case scenario and examine what happened when we were entering a bear market last cycle, it was never a straight line down. We always had significant relief rallies. Like, look, we dumped here 47% and then it pumped 62. Like, guys, we're not just going to go down in a straight line. Just like when we're going up, we don't just go up in a straight line. We have corrections. Same thing when we're dumping. We don't just go down in a straight line. We have relief rallies. And so while Bitcoin has had a significant dump, we've barely seen a relief rally. We've seen a tiny relief rally, bit of bullish divergence, but we had massive resistance above us, so we got rejected. Okay, normal. And now we might just be making a higher lows. Normal. Nothing to be freaked out about. So what we need here is confirmation. Getting above 42,000 or breaking below 30,000 would be confirmation of the bear and bull trend. Now, something to be aware of as well. If we do have a relief rally and we do find rejection maybe off 50,000, maybe off this trend line, then we could make a macro lower high, and that would be quite dangerous, because if we end up doing something like this, where we get above 42,000, break up, maybe test 50K, maybe this red trend line, and find rejection, we could fall back down maybe 42K and maybe even lower. So given that the bull market's kind of up in the air, my plan is that once we can get above 42K, it makes it far more likely that the relief rally will continue. And so once we see a Bitcoin from 42 to about 50K, I do plan on taking some profits on probably a minority position of my portfolio to move into stablecoins and stake them and become a liquidity provider, earning yield until we see extra confirmation with the market, and I can be fully confident that the bull market will continue another 6 months or whatever it is. So, folks, I plan on taking profits if we do get a relief rally, basically from about 42K to about the low 50,000s. Now, the last bit of bullish confirmation I think we need is getting above 57,000, because there's multiple layers of resistance. So really what would make me confident is getting above this red trend line, getting above this, falling down, retesting it, and then getting above that volume, getting above, retesting it. And once we do that, we can make new all-time highs. So the more layers of resistance we break above, the more confident we could be that that bullish trend will continue. So guys, there's really no need to talk about, oh, feelings, my gut feeling, my intuition about the market. No. We need to see price action do certain things. And whatever price action does next will tell us what's more likely to continue happening. And so bearish confirmation is below 30K. Bullish confirmation is above 42K. And again, once we, whatever way it happens, I'll update you guys on the next most relevant levels. But for now, just like the simplest thing for you guys to know, 30,000, if we break below that, bearish confirmation. 42,000 and holding 42,000, it's very important to specify holding, because we could just wick above and fall back down. Like I'm talking about a daily candle, 2 daily candles above 42,000 is confirmation of bullish trend reversal. So that's what I'm looking at with Bitcoin. And another factor to be aware of, which is concerning, is this could very well end up being something of a bull flag, or a bear flag. Where what a bear flag is we have a impulse downwards followed by a sideways moving channel or triangle, and then if we break down bearishly, we can move the initial length of the first downward impulse, so of the first retracement, which would be very no bueno. But even if we assume worst case scenario, bull runs over, wrap it up, we have years of correcting consolidation aside. I mean, if you're holding solid altcoins, not shit coins like Shiba and Doge, I'm talking about solid altcoins, Ethereum, Polygon, Cardano, Polkadot, VECHAIN, the things that the next global decentralized financial system will be built on top of. I'm personally confident that those coins would survive a bear market and make new all-time highs next time around. So worst case scenario, you just spend a couple years staking and earning interest on your long-term position. So again, guys, that's most of my feelings with Bitcoin at the moment. Now, there are a couple major news stories, and wow, I haven't even really delved into the juicy stuff yet. Some kind of on-chain metrics that we should go through. So before we do all that, let's see what you guys are saying here. What are you guys saying in the comments? How do you guys feel? Do you guys agree with me? Do you not? Christopher Hicks says, good stuff. Thank you. Appreciate that. Steven Linguini says, would love to see a vid on where to stake and what you recommend when the time comes. We have put out some videos like that, but I'll just briefly update you right now. So Celsius is a wallet for staking. You can earn, I think it's like 14-15% on MATIC Polygon. Same thing with synthetics. That's where I have mine staking. Crypto.com. Kraken offers, I think, 12% compounding interest on Kusama. Well, ultimately, if you're interested in staking, in our VIP disc group, we have a whole channel with, I think, maybe about a dozen staking opportunities at this point that we're all using. And later on in the video, I'll talk to you guys about a new staking opportunity that I'm looking to exploit in the near future, and why it's for multiple reasons a potentially very good opportunity, because I think it's one of the best risk-adjusted returns opportunities when it comes to staking. So maybe I'll delve into that a bit later, but for now, that's that. So let's see what you guys are saying here. Yes, 15% is not bad. 15% is great, because 15% for MATIC Polygon synthetics, it's compounding. They pay you out weekly. There's no lockup, except whenever it comes time to withdraw for the first time, you have to put in a new address, and it locks it up for 24 hours. But that's just for the first time. After then, you can withdraw whenever. And yeah, man, they pay you out weekly, and it's compounding, so you could just leave it there. Like, if you had Polygon, Polygon's probably going to be here next cycle and be great. Same thing with synthetics. So if you wanted, you could literally just leave synthetics, leave Polygon in that wallet for the next several years, for the next bull run 2025, and earn weekly compounding interest, 14-15% APY on Celsius. So yeah, definitely a great opportunity that I will be using. Is there risk staking solid coins at a bear market? I think the greatest risk factor are, well, a few things. Number one, the unknown. Black swans. A new project coming up that completely does things better than the project you're holding. But I think there are, at the end of the day, nothing's for sure. But there are some solid coins that I do think have better than not chances of surviving a bear market and making new all-time highs next time, like Ethereum, Cardano, VECHAIN, Polkadot, Kusama, Chainlink. There's solid Polygon, solid altcoins that will, in all likelihood, survive a bear market and make new all-time highs next time around. So yeah, that's that. Yeah, I've got both MATIC and SNX staked in Celsius. Yeah, same here. Great staking opportunity, all tethered up. Yeah, guys, and again, just to really let you guys know, I do plan on taking like a minority position of my portfolio, taking profits somewhere over here, just to have a bit of stable coins. And again, you can take those stable coins and you can earn 5, 8, 10% APY on ANC on Anchor protocol. You can earn 18% APY a year. So there's tons of opportunities, guys, and we'll delve into that. But why don't we keep kind of hammering on here what's going on with Bitcoin, because there's some important things to keep an eye out for. Always I want to update you guys with the new pool here, net unrealized profit and loss chart, because this is historically called cycle tops pretty goddamn well with these blue euphoria zones. Blue euphoria zone means too much people are making too much money too fast, and whenever we enter that blue euphoria zone, it's correlated with cycle tops. We never enter that blue euphoria zone. So could it be that we're maybe entering, a 2013, 2014 cycle where we have this lull in the middle, maybe some weeks, some months of consolidation? Maybe. I don't know at the end of the day. Nobody knows at the end of the day. Case and parachute auctions around the corner, 65K in 8 years from sleep on it. XD. Yes, Kusama parachains are around the corner. I love Kusama. I've been buying Kusama on the dip. I've been staking Kusama. There's not enough good things I can say about Kusama. I've definitely been buying Kusama on this dip. As well, Tokenmetrics. We're signed with Tokenmetrics. You know what, guys? Just because I like you guys so much, I'm not supposed to do this, but I'll show you guys what Tokenmetrics is saying when it comes to their favorite coins right now. So again, I'm not supposed to show you this, but I may get in trouble, but don't tell anyone. Do not tell the Tokenmetrics guys. Folks, smash this like button because I'm going to show you something I'm not supposed to show you. So look, it's not just me who likes Kusama. It's the Tokenmetrics guys, and I'll show you why. So for those who don't know, Tokenmetrics, they're an AI fueled research company. They just do research and analytics on cryptocurrency. And if we go to their what they predict will be some of the highest performing cryptocurrencies when it comes to investing on a year-long horizon, Kusama's in the top 3. So Kusama, Celsius, OKB, they love right now. So it's not just me who loves Kusama's fundamentals and technicals. It's Tokenmetrics with their AI fueled price predictions and portfolio suggestions that like Kusama a lot. It's ranked. It was in the top. It was number 1 a couple days ago. Now it's in the top 3. So folks, if you want to check out Tokenmetrics, there's a link down in the description below. It really helps with the channel if you sign up using that. They also have a kind of like a paid trial. It's like a week for like $10. So go check that out. Now, guys, look. Another thing I've been saying on the channel that is a key thing to understand what is going on with Bitcoin is the hash rate. The hash rate for Bitcoin historically correlated with price action, but especially as of late. Because once the China FUD started and the power outages started in China, it correlated exactly to the first drop in hash rate and exactly to when price action first started to drop. So hash rate drops, price drops. Hash rate recovers, price recovers. Hash rate drops, price drops. Can anyone see a pattern here? So as of late, hash rate's been trying to recover here, but it's down today. Isn't it interesting that when hash rate's down today, price is down today? So once we see continuation of this recovery with hash rate, that's our cue that Bitcoin's perhaps ready to have a little bit move to the upside. Now, something that also that's super interesting and a bit concerning is the Bitcoin held on exchanges. And I actually want to delve into some further nuance with this because I found some more specific numbers I want to share with you guys. So ever since 2020, Bitcoin's been doing nothing but leaving exchanges. Very bullish catalyst, less supply, less selling pressure, price goes up. What we've been seeing, though, as prices are dropping from kind of the mid-60s, is Bitcoin's been moving on exchanges to be sold. As of recent, we've seen a little bit of Bitcoin leaving exchanges, but now it's ticking up again now that we've been kind of moving down. So as long as we see kind of this trend continue to reverse, that's a sign that Bitcoin could continue to be bullish. But if we see Bitcoin continually entering exchanges, that is a very, very bearish sign. So you guys are saying the video is blurry. Can you guys see this okay? Do you guys want to let me know if this is a if you guys can see what I'm showing you. If you guys want to let me know in the comments, that would be great. In the meanwhile, Jado says, what do you recommend? I'm 50K invested. Got in about 2 months ago. Portfolio's down 40%. Tether in or holding multiple bags. Again, man, I cannot tell you what to do because I'm not a financial advisor and I can't get in trouble. Best I can do for you is tell you what I'm doing. I'm buying this dip. I could be wrong. Again, my approach is everything I'm buying right now, I'm willing to hold for years. So that's my approach. And once we, if, and it's not a guarantee, if we do see a relief rally, a break above 42K and maybe a push to the 50s, I will, at that point, on an impulse, on the uptrend, be taking some profits on a minority position in my portfolio to move into stable coins and stake them and become a liquidity provider. So that's honestly my approach right now. I don't sell dips. I'll either hodl for years or sell a pump, but I refuse to sell a dip on an asset class that I think is the future. So that's just me. I have a high risk tolerance and I'm willing to hold for years. That's definitely not the case for everyone. So just understand that what I'm doing might not be the ideal thing for you because everyone's circumstances are different. Now, something to consider is the fact that the market is in extreme fear right now. And if we take a look here, basically since 2018, all the times the market has reached its most fearful point has historically, not always, correlated with local bottoms. And what have we been seeing here? The market is as fearful now as when the pandemic first hit back in 2020, back when the bottom of the bear market back after I think 2018. So again, guys, there's a distinct possibility that we could have bottomed out and that the bull market's not over and the market is extremely fearful. And whenever you got to think about it this way too, cryptocurrency is really not driven by fundamentals. Dogecoin didn't pump from like a tenth of a penny to 50 cents because of fundamentals. Nothing pumps and does 50x because of fundamentals. Crypto is driven by fear and greed. All right, fear and greed. That's some of the major factors. It's not P&L. We're not trading the stock market. We're trading crypto. Crypto is highly speculative. It's driven by fear and greed. And since it's driven by fear and greed, following when the market's in extreme fear and extreme greed has historically correlated with local tops and bottoms. And so historically, buying the extreme fear and selling the extreme greed have been the most profitable strategies in crypto. So I believe in the space long term. We are in extreme greed, and this has historically been the best place to buy. Not a guarantee that the price can't keep falling. It could very well keep falling. Totally 100% possible. But again, guys, I can't tell you what to do. I'm sure as shit not selling a dump. I'm going to wait for a relief rally and take some profit on a minority position in my portfolio. Hey, maybe someday too, I'll share with you guys my portfolio. Maybe even percentage. Nah, man, I don't know about that. We'll see. We'll think about that. But guys, I also want to share with you and clarify who is buying and who is selling. Because what we're seeing here with Bitcoin held on exchanges is that the American exchanges, Gemini, Kraken, Coinbase, Bitstamp, the balance of Bitcoin is actually leaving. So the American market specifically is buying up Bitcoin. But if we scroll up a bit here, you can see that the balance held on kind of global exchanges like Binance, Bittrex, and Bitfinex is increasing. So I don't know what this means, but it's just interesting to note that the American market is buying Bitcoin and the global market is kind of selling. So I'm wondering if, because there's institutions kind of centered in the United States, if that's the buying we're seeing and kind of global hands are weak hands. I don't know. Maybe I'm reading too much into this, but it's just something interesting to know that the American market is buying while the global market is selling off. Don't know what that means, but interesting thing to note. Also, I think there was another major news story I want to talk. No, I think that's pretty much it when it comes to Bitcoin. What are you guys seeing here? So let's see. Hey guys, I recommend looking to Zoo token. Yeah, man, I don't know, bro. Zoo token. All these animal tokens sound like meme coins, and these meme coins are garbage. Especially right now. I mean, God, like who's trying to buy a meme coin right now like we may be entering a bear market. It's possible. I don't think we are, but if we do, these meme coins might not ever recover. But maybe I'm wrong, so you do you, boo. Now, something else that I want to bring up is Uniswap. I think Uniswap might be kind of a good gauge, a good temperature check of the altcoin and DeFi space. So I think once we see, Uniswap start to recover, I think that's when we see a lot of these altcoins, a lot of small cap altcoins start to recover. And also, once we see greed come back into the market, I think that's when we're going to see these smaller cap altcoins start to recover. So what I'm looking out for here with Uniswap is very simple. We can draw a simple trend line. If we start to see a little bit of bullish divergence, then I think we can see a bit of a relief rally here with the altcoins. And ultimately, my main takeaway with these altcoins are pretty much the same, which is we cannot make new lower lows. If we do, very bad news bears, very no bueno. If we see a bit of bullish confirmation, especially with something like Uniswap that kind of leads the altcoin market, leads DeFi a bit, that should be a very good sign. Now, something else to consider is Ethereum. So Ethereum definitely does lead the altcoin market as well. When Ethereum started to go down, that's when alts really started to show their weakness. And so Ethereum's been breaking below critical support, kind of here around $2,400. Not good to see. We're kind of testing our 0.5 Fibonacci retracement. Hopefully that holds. Let's say that doesn't. I think we're probably going to retest this zone here, which I will now draw. And so again, Ethereum is another example of the standard bearer when it comes to like solid altcoins. Ethereum, like in my view, is like buying Apple or Google or Facebook in the early 2000s. Like, yeah, it could have been super volatile in the early 2000s, but if you just held it 5, 10, 15 years, it would have made hundreds of X's from when you bought in. Now, I don't know if Ethereum has hundreds of X's still yet in it, but I mean, I think over the long term, if EIP 1559 gets introduced, Ethereum becomes scalable, Ethereum becomes deflationary, next cycle, 5 to 10 years, I think Ethereum could flip Bitcoin. So while, yes, there's still plenty of downside potential, we're down 48% from all-time highs, but we're pretty much half of the worst case scenario is already over. So, I mean, half of what's possible has already happened. I mean, worst case scenario, we fall, 90%, 95% in a bear market, 80%? We're not going to go all the way to zero. I mean, well, it's possible. I don't think we will. So, I mean, worst case scenario, we fall down like low hundreds? That would be super shitty, although very unlikely. But next cycle, 5-10 years, Ethereum is like, and again, I hate throwing out numbers like that because I'm really not buying this goddamn FUD we're seeing. Now there's a lot of weakness in global markets, the stock market, the bond market, the Americans, interest rates. There is global instability, and unfortunately that does affect all investment in speculative markets such as crypto. So like if we see a stock market crash, that will definitely dump crypto, unfortunately. But at the end of the day, Ethereum next cycle, well, in my opinion, is almost guaranteed to reach its all-time highs and vastly surpass it again. So even if I have to hold a couple of years, Ethereum is like the thing I'm least worried about holding yet. Again, I think it'll flip Bitcoin. So why would you sell? That's my opinion with Ethereum. So Michael Frederick here with the interesting question says, "What's your biggest bag?" My biggest bag. So my biggest bag right now, not because of my initial investment, but just because of how much it's grown, is VECHAIN. VECHAIN is actually my biggest bag. Ethereum was my biggest bag for a while, but I've been using my Ethereum to trade and buy shit on Uniswap. So I've been unfortunately letting go out of a bunch of Ethereum to buy these DGen altcoins. And they're not really DGen. I think they're super solid. But anyways, yeah, no, because of that and the fact of how much VECHAIN has grown, VECHAIN is not my biggest bag. Because look, I started dollar cost averaging when I went to VECHAIN, I think at around like 2 cents, around 2 cents, under 2 cents. Let me see. Yeah, my average entry for VECHAIN is like 1.5 cents. So, like, again, even with this massive correction, I'm still chilling because I'm still up like 1.5 here. I'm still up over 500% on my average entry on VECHAIN because I've been in the space for a while. So again, even if like we correct further, I'll just buy more VECHAIN because next cycle, I think VECHAIN is going to reach its all-time highs and surpass it again. So, and the bull run may not even be over. Now, while we're on VECHAIN here, a few things. I think what's going on here is pretty clear, which is we're finding rejection and resistance based off this trend line from this all-time high to this wick and just extend that. That's fully we're reacting off of. So what I'm seeing here is, while we can draw multiple different trend levels and resistance levels for VECHAIN, I think the market's showing us that this level is pretty reactive and fairly relevant. So what I'm seeing right now is, the moment we see bullish divergence from this thing, I think we'll see a bit of a relief rally. And if you're looking for a kind of a spot to maybe take some profits, lower your risk, move into some stable coins, I would wait for maybe bullish divergence from this thing, have a little bit of a pump, maybe 14, 16, 18 cents, kind of mid-teens, high teens, and then I would maybe look to take a bit of profits there, and then buy back on bullish retests and when the market's looking stronger. So that's what I'm looking out for with VECHAIN. So what are you guys seeing here? So Alex says, same VECHAIN grew to be my biggest bag. Yeah, 100%. And look, if Bitcoin bottoms out here, if we flip 42 from resistance to support, if we see more bullish confirmation, I think VECHAIN could go to $1 this cycle. So, I mean, just something to keep in mind. I could be wrong though. We'll see. Yeah, that's going with Ethereum. And also, guys, something to consider here as well is Ethereum Scalar Arbitrum has launched just the other day. Arbitrum is a second layer scaling solution for Ethereum. Guys, Ethereum, all I love Ethereum, big problems, not scalable, high gas fees. This is just one further rollout, one further improvement to Ethereum. Guys, for those who don't know, Ethereum 2.0 is being rolled out. Ethereum 2.0 will make Ethereum scalable and cheaper to use. It's being rolled out in phases and stages. And one of the biggest stages is coming this summer in July. So when that happens, I will probably be using that catalyst as another take profit level. So usually when there's big news, big catalyst, big adoption, something big like that, there'll be an anticipatory run up leading up to the launch, and then a sell off afterwards. So leading up to maybe the week before, 2 weeks before EIP 1559 and Ethereum become deflationary, I will probably sell a bit of my Ethereum begrudgingly to buy stable coins and start moving some of the stable coins to have some money to buy in the bear market. Because while we may be entering a bear market now, we may not be, but I do think the bear market will eventually come. The bull market will eventually end, and whether it's now or later, I don't know. But whenever it does indeed come, I want to have some money to buy the bottom, buy the dip, and then hodl until 2025, next cycle. So yeah, that's why I do plan on taking some profits on my Ethereum and other stuff in July, in the summer. So that's what I'm looking out for with Ethereum. And also something just interesting to see here is that the total value staked on Ethereum 2.0 and Ethereum staking has been steadily increasing. We just recently got over 5 million ETH is now locked and ETH 2.0 staking contracts. So very, very interesting development with ETH. Let's talk about Polygon. Polygon, again, guys, another favorite. Polygon was my first 100x. I bought Polygon, what was it? Let's see here. Yeah, just under 2 cents is my average entry, and so I sold around $2, so 100x. And this is what I've been using to buy the dip on everything. And so right now, what I get into Polygon, maybe not just now, because again, we have broken below support here, below volume at $1.80. So I think honestly, $1.20 to about $1 is very, very realistic for Polygon, and somewhere around there is much more digestible for me. And honestly, guys, right now, dollar cost averaging is your best friend. Don't blow your load all at once. If let's say you have $1,000 to invest, 10,000. Buy the dip with 10%. Then if it dips more, 10%. Dips more, 10%. Bullish breakout, 10%. Bullish confirmation, 10%. And I would go about it that way. I definitely would not be putting in everything all at once, even though I am. But do as I say, not as I do. I am a degen. Now, there was some big news with Polygon and Google. So Google's big query service for analytics is now adopted Polygon. So Polygon will now provide analytics to Google. So guys, just the beginning of adoption. That's it. That's it's good to see Polygon is established itself as a massive player in this space, and I think Polygon is one of these projects that will survive a bear market. And it's not even just me saying this, it's Vitalik Buterin saying this. Now, I don't have the tweet pulled up, and I don't have a reference, but Vitalik himself has said that second layer scaling solutions for Ethereum will still be needed even after Ethereum 2.0 is fully rolled out. So something like Polygon, I do believe, has a future in the space, and it's proven itself is a leader in the space for sure. So Polygon definitely one I wouldn't be worried about holding long term. And again, there's insane interest rates with Polygon. Again, like 14-15% on Celsius. You get paid out weekly. It's compounding. And then also, guys, since we're on this topic, I shared this with our VIP Discord members just the other day, but I'll share with you guys now, which is Polygon recently partnered with SushiSwap, another DeFi swap. And they have an insanely attractive liquidity providing program. So for those who don't know, you can earn interest several ways in crypto. You can stake, you can loan out, or you can become a liquidity provider. And for the longest time, becoming a liquidity provider was very unrealistic for most people because it was insanely expensive to become a liquidity provider. But now that Polygon is partnering with SushiSwap, you can trade and swap through Polygon, and the gas fees are non-existent. So right now, on my other screen, I'm trying to find the exact liquidity providing opportunity that I'm looking at. So basically what I'm trying to say right now is that I'm going to be looking into becoming a liquidity provider with some stable coins. And because it's all through Polygon, the fees are non-existent. Like, it's very, very little. And so you can earn a very, very high interest rate through Polygon. So okay, I cannot find the exact pairing, the exact reference I want to show you guys, but I'll show you something that does get the point across. So here with SushiSwap, again, they partnered with MATIC. You can become a liquidity provider and earn a high yield on your coins. And so while I can't find this specific example, it's in our VIP Discord group. One of the biggest problems with becoming a liquidity provider is impermanent loss. And so I think I've found a staking opportunity specifically with SushiSwap through Polygon that's very, very appealing for multiple fronts. So there's an issue when becoming a liquidity provider. So liquidity providing, you basically provide two sides of two pairs, either like, ETH USD or in USDC, and then you provide liquidity to the pool, and then you get paid an interest rate, and then you can unstake. Typically very high fees, and so through Ethereum. So for most people, becoming a liquidity provider was only realistic if you had tens of thousands, hundreds of thousands. But now through Binance Smart Chain, now through Polygon, now through some of these cheaper chains that cost pennies per transaction, becoming a liquidity provider is much more realistic. And so biggest problem, why do you not want to become a liquidity provider? The biggest risk factor is impermanent loss. And basically what impermanent loss means is if when you're providing liquidity, you provide liquidity in a pair, and you have to provide equal worth of each coin. So meaning if you want to become a liquidity provider, you need to in liquidity provide 1 ETH, you need the dollar equivalent. So if ETH is $1,000, you need to provide $1,000 in stable coins, and it always needs to be an exact 50-50 match. And so what happens is if you put your money in, and if one asset vastly outperforms the other, the pool sells the asset to always try and have a 50-50 match. And so when it comes time to unstake, and one of the assets vastly outperform the other, you don't get what you put in back. You get that 50-50 representation, like that 50-50 stake of the pool. And so if one asset vastly outperformed another, the pool had to sell that outperforming asset to buy more of the other. You get less of that outperforming asset back. So that may be very complicated. Ultimately, the main takeaway here is when you're a liquidity provider, whatever pair outperforms the other, you get less of that one back. So that's the risk when it comes to becoming a liquidity provider. That's impermanent loss. I hope I explained that somewhat well enough. But the reason why I'm harping on SushiSwap right now is because I believe I found an opportunity that provides great risk-adjusted returns, meaning you can actually become a liquidity provider on SushiSwap with stablecoins. So the thing about stablecoins is that they're stable and that they don't fluctuate. So the risk of impermanent loss is vastly reduced. And so on SushiSwap, they have this partnership with Polygon MATIC where you can become a liquidity provider on SushiSwap through the Polygon chain, thus having much lower fees, while also earning interest rate on stablecoin pairings. I believe it's 20% last time I checked. But you also get SushiSwap and Polygon on top of that. So you can provide liquidity on SushiSwap through Polygon with cheap fees, USDC and stablecoin DAI, so 2 stablecoins. You provide liquidity for 2 stablecoins. The risk of impermanent loss is far greater reduced because stablecoins are stable. And you also, in addition to your 20%, get paid SushiSwap and MATIC Polygon on top. So I share this opportunity with our VIP Discord members. If you want to become a VIP Discord member, you sign up through our Patreon. Link for that down in the description below. Ultimately, you get USDC, you get DAI, you connect SushiSwap to the Polygon network. That way, the fees are nothing. It's pennies, very, very cheap. With Ethereum, it would cost hundreds of dollars. With MATIC Polygon, it's pennies. It's nothing. And then you become a liquidity provider. You could even do it with a couple $100 because the fees are nothing. With USDC DAI or other stablecoin pairs, and you'll get paid that interest rate that does fluctuate, and also get SushiSwap and MATIC Polygon on top of that. So if we assume it's a bear market's coming and you have a bunch of stablecoins laying around, well, something that you could do, something that I do plan on doing, is going to SushiSwap, becoming a liquidity provider for USDC DAI, very low fees, and earn roughly 20% APY, but also on top of that Polygon and MATIC. And so I could just leave that there for the next 4 to 5 years for the next bull market and earn a bunch of SushiSwap and MATIC and high interest for several years to come. So, this is one great option to explore. When it comes to these smart contracts, at the end of the day, folks, a smart contract is only as good as its code, and all of these can theoretically be hacked, although the risk is low, but it is a theoretical real risk. So my approach when it comes to staking and earning yield on your stablecoins is don't put all your money in one place. I'm personally spreading out through many different protocols, through Celsius, through Anchor, through liquidity providing. Just spread out your money throughout different protocols. That way, if one thing gets hacked, you don't lose all your money. The risk of hacking is very low, but it's theoretically a real possibility, so it's something to be aware of. And again, specifically with liquidity providing, the biggest risk is impermanent loss. Basically, if one asset vastly performs the other one, when it's time to withdraw, you get less of that asset than what you put back in, which is why they pay these high interest rates. The higher interest rate you're seeing on liquidity providing, typically the higher the risk because the more volatile the asset is. So that's what you got to be aware of. The more volatile the asset, the more risky it is, the more risk of impermanent loss, the less coin you're likely to get back when you withdraw. Thus, why they pay higher yields. Typically, the lower the yield, the safer the pool. The higher the yield, the more risky, more volatile, and the more risk of impermanent loss. So that is that. I hope you guys understood what I was trying to say. If you guys need me to clarify, please let me know in the comments because I just rambled on there for like 5 minutes, or maybe even longer. So let me know if that made sense. Let me know if I need to clarify. So that's that. So Dennis S here with a $5 super chat. Thank you for your support. Says, dude, I don't think we are in a bear market. I don't think either. We are being led to believe that we are. I think so. Even some crypto YouTubers keep flipping every other day. See, again, this is why I say specifically, you're hearing a lot of YouTubers talk about their fears, talk about their intuitions, and it's like they're venting to their therapist. Guys, I see this too. I'm seeing a lot of people flip-flop. I'm hearing a lot of people talk about, news and their feelings. Oh my God. Guys, no. It's actually very, very simple what we need to look out for to understand what's going on. And what we need to look out for is further confirmation. Because look, I'm a technical analyst, or at least I'm confident in my understanding of technical analysis. And for me, I'm not confident in calling it right now. There's obviously very concerning signs that's obvious. We're corrected a lot. We're breaking below through a lot of support. This is uncommon. There's a lot of very obvious reasons to call this bearish. That's obvious. But at this point, because of the fundamentals and combination of who's buying and there's even some more important news stories that we haven't even gotten to anyways, that I'm not buying this FUD. I'm not buying it. What I really think is happening is the legacy markets and institutions are waking up to what Bitcoin and crypto is and the future potential and the return on investment potential, and they miss the boat. And so what they're doing is that they're causing FUD at the point of greatest weakness to buy the dip and accumulate themselves and cause giant fear. And only after liquidating and shaking everyone out will they allow the bull market to continue. So while it's possible that we may be entering a bear market, I'm really just not buying this FUD. I think it's bullshit. It doesn't make sense to me that at the point of the greatest possible use case with Bitcoin and crypto, we end a bull run prematurely, I'm not buying it. I am not buying it. And that's why I'm buying this dip. Because worst case scenario, I just stake and earn interest for years on coins that are likely to recover and make new all-time highs next cycle. So that's where I'm at right now. Yeah. So thank you for your support, and thank you everyone for being here. Yeah, thanks for the info. Appreciate that. Love the rants. Thank you. Yeah, so that's that. So like I said, there are some important news stories. There was this one news story. Let me see if I can remember where I put it. About specifically, maybe it's in the news section. That would probably make sense. About whales. Yes, whales are buying this dip. Whales are buying this dip. And if we go over here to this news chart, you guys should sign up for the Glassnode. I don't know if this is only if you're paying for it, because we're paying for Glassnode, but I wonder if you get this even if you just sign up. Anyways, whatever way you can sign up and get their newsletter, it's actually very informative. We read it every time we get it, because they highlight for us what they think are some of the most relevant things and charts for the day and kind of for the week. And so what I wanted to see, I forget if this is here or not, is the percentage of Bitcoin being sold at a loss, and also by newer investors. Because I forget, let me see if I can find the chart here, but specifically what's happening right now is that Bitcoin's being sold by noobs, basically people who've been holding 1 to 6 months are selling their Bitcoin. So weak hands, retail people who followed in at the start of the bull market. So I don't know if I might not be able to. Yeah, I don't know. I might not be able to find it quite just yet. But the point is, weak hands are selling, noobs are selling. People who've held and bought their Bitcoin recently are selling, but we're also seeing institutions buying. We saw OTC transactions spike right as Bitcoin dipped to about 30K. So there's been a bunch of Bitcoin buying at around below $40,000. So let's see. There's this report by blockchain insights platform Chainalysis saying that there was a shit ton of Bitcoin bought below 40,000. So let's see here. Chainalysis adds that 1.2 million Bitcoin was sold at a loss of between 5 and 25%. Other 120,000 Bitcoin was sold at a loss of 25% or more. The blockchain analyst firm estimates that the majority of selling came from short-term holders. So yeah, that's the thing. So short-term holders are selling, and whales are buying. Again, guys, I hate to see it. I do think this bull run is going to continue. This doesn't make sense to me that we would end this bull run prematurely, and we're seeing the signs. OTC transactions increasing, the number of whale wallets buying, the dip. So we're seeing whales and institutions buy the dip, while retail hands and weak hands are selling. Bitcoin is moving from weak hands to strong hands. And so it's unfortunate to see. The fundamentals for Bitcoin and crypto have never been great. So whether the correction goes on a week, a month, or 3 years, crypto's here to stay. So I'm definitely not selling the next, what I think could be the next Apple, the next Google, the next Facebook, the next global decentralized financial system. Because yes, we have corrected, let's see, 48% from all-time highs. And we could go on to correct another 70, 80, 90% from all-time highs. That's theoretically possible. But I do think Ethereum is the next thing that the global decentralized financial system is built on top of. And so why would you sell the next, next biggest asset class in the world? Just doesn't make sense to me. Like, imagine this. I liken it to this. Imagine if you bought Google back in the early 2000s at $1, and you saw it run up all the way to $100, and then it crashed back down to $10, and you'd say, oh my God, it went from $100 to $10, it crashed 90%, I lost all this money, and you panic sell. Well, if you would have just held, 5 years, 10 years, a couple decades, 2 decades, Google's worth, over $2,000 today. So that's how I look at Ethereum. Yeah, no, it might crash more in the short term, totally, but I think Ethereum has the best fighting chance of being the next globally adopted decentralized blockchain system out there, protocol out there. So if the only reason why I'm selling my Ethereum is to buy back more in a bear market. That's the only reason. If not, I would just hold this thing forever. So that's my opinion with that. Now, let's see if there's any. So guys, another major piece of news, another piece of FUD that's spooking the market right now. And that's another thing we gotta understand about the market. The market likes to overreact. Every reaction is an overreaction with the market, and the market gets very easily spooked. Markets are very easily spooked, but especially crypto, because crypto is not led by earnings statements, quarterly reports, profit and loss, debt to earnings ratios. No. Crypto is led by hype and greed and fear. And so whenever there's FUD news stories, I believe it disproportionately affects the crypto markets more so than it would other markets, although other markets are definitely affected by FUD 100%. But in crypto, it's all sentiment driven. And so these news stories highly affect sentiment. And so there was a news story today that negatively affected the sentiment, which is the Biden administration for the Americans are trying to introduce new reporting measures for these exchanges to report more information on who's buying, what they're holding, foreign investments, that kind of thing. And look, while again this does cause FUD and fear and fear, uncertainty, doubt, and selling in the short term, at the end of the day, we just need to get used to this. Regulation is necessary. If crypto is going to be the next stock market, option markets, commodity markets, it's going to be regulated. So this is going to keep happening. There's going to be dozens and dozens of more substantial, regulation FUD news stories over the next several years. So get used to this, guys. Every single month, quarter, year, there's going to be several new regulations being introduced. It's the newest asset class is just growing and being adopted mainstream. This is to be expected. We should expect further regulation. It's in fact necessary for adoption. If we want Apple and Google using cryptos, we need regulatory clarity. These companies need to understand what is a security, what isn't, how to report things, how to custody things, all this stuff, taxes. This is all regulation. Regulation is absolutely necessary. So the more regulation we see, well, it is a temporary FUD story. Over the long term, it's necessary for crypto to be adopted in mainstream. So I honestly think that all this FUD we're seeing is a giant nothing burger. The regulation FUD, the Elon FUD, the Bitcoin FUD. What is the stuff with China do? Well, they're clamping down on miners. So miners are going to sell, but it means Bitcoin's going to become more decentralized. The hash rate's going to become more widespread globally, and now Bitcoin will become greener. That's not a bad thing. That's a great thing over the long term. So that's what's going on with that. So Dennis asks again with $2 super chat. Thank you for your support, man. Says, dude, what do you think about this Wyckoff crap? Look, again, guys, people love to come up with justifications in retrospect for shit that's happened. And while like I can try and pull up the chart on my end here on my other screen, Wyckoff pattern. Look, sure, it may be valid, sure. And I'll pull it up here for those who don't know. So this is kind of like the Wyckoff distribution model here, where basically they're saying this is how whales manipulate markets, where they bring shit up, we basically move sideways, we break below support, and then it's kind of a massive head and shoulders. Like we impulse up, we consolidate, and then we fall back down to the length of the original impulse, or to the bottom of the original impulse. It's that simple. And look, this may very well end up being the case. The market did look very similar to this, and so something else to understand, guys, is it basically does the same thing in reverse as well. So in terms of accumulation, we have our sell-off here, all right, and then just up here to sideways consolidation, and then we start up again. I mean, yeah, you can call this the Wyckoff model, but you can also just, at the end of the day, he's just describing how markets move in cycles, and that's nothing new. The markets do 100% move in cycles. We move in boom and bust cycles, especially in crypto. And what happens? We have a boom, we have a bust, a period of consolidation, and then rinse and repeat, rinse and repeat, rinse and repeat. So what have we seen? We've seen a boom, we've seen a bust, and so what are we going to see here? Consolidation, and then a rinse and repeat, rinse and repeat, rinse and repeat. So, yeah, look, man, Wyckoff may be fully valid. I've seen some videos, some reasoning as to why it's fairly convincing. At the end of the day, if we see a consolidation pattern, good to see. Ultimately, what I'm looking for is a break below 30,000. And according to the Wyckoff model, depending where we're at, we may very well see lower lows and then bullish breakout on the other end. So while I have been saying a lower low would be bearish confirmation, it's still theoretically possible that we can make a lower low, maybe fall back down to 28,000, 26,000, and then go on to pump again. Just have one final shakeout of the weak hands. But at that point, a lower low below 30,000 would serve as enough confirmation for me, where I would start to lean more bearish than bullish. At this point, while things are obviously bearish, I'm still neutral about the state of the market. Break below 30,000 would make me less neutral and lean more bearish. Although, again, it's theoretically possible that we could still make new macro lower lows and eventually make moves to the upside. But the reason why we don't want to see these macro lower lows is because, again, looking back at 2017 here, these macro lower lows served as confirmation of the bear market. So the more we see of this, the more likely it is that we keep going down. So that's what we really, really don't want to see. And so a break below 30 is just, oof. I thought a break below 30 is kind of a tipping point for me. It's the inflection point. So yeah, that's my thoughts with that. Let's see what you guys have to say here. I love the stream, but I can't lie. I've been converting most of my portfolio to ADA, and I've only been green during this crash. Yeah, man, I wouldn't I wouldn't count on that forever. Look, ADA's looking weak. Semi-weak. So what I've been saying with ADA, I think to understand ADA, it's actually very, very, very simple if you want to know what's going on with ADA. We just need to hold above these 3 previous peaks. All right, this super, super clear, massive kind of zone that was previously resistance. We broke above, went back down to retest it, kind of held it as support. It's just a very reactive level. ADA's forming a very clear base here. So if we want ADA to be bullish, we need to be above these 3 peaks. If ADA starts to close below these 3 peaks, we're bearish. Above this bullish, below this bearish, it's very, very simple to understand what's going on with ADA. There's no need to overcomplicate it. It's just that. If we're above that, we're bullish. We're below that, we're bearish. It's that simple. And just something else to understand, while I do like ADA, I own ADA. If Bitcoin goes on to correct to 20K, ADA is going to dump too. It's just going to happen. So just, I wouldn't be really overconfident with these specific altcoins. Another thing too, while Messin isn't here, I would love for one day me and him to discuss some of our disagreements that we have in terms of the market, because while we do agree on most stuff, we do have some interesting disagreements that I think would be very interesting to hash out on the live stream. Because let me see if I can try and explain his position well. Which is, look, Messin thinks, for those who don't know, me and Messin, we both run this channel. Messin thinks that cryptocurrency is moving to the point of adoption and use case, that at some point individual cryptocurrencies their price action will move based off their fundamentals and their catalysts, irrespective of the greater market. And so I'm going on to explain right now what we disagree. So irrespective of the greater market, and so if Bitcoin goes down, and Ethereum gets adopted by Apple, then Ethereum will go up regardless of whatever Bitcoin's doing. And so for me, I kind of lean, our disagreement I think lies in the fact that I lean to more towards the fact that regardless of individual use case and individual catalysts and individual adoption, I think crypto and alts will continue to be fully led by Bitcoin, because that's what's always happened historically. I think if we do enter a bear market, altcoins will be suppressed for years, regardless of whether they have mass adoption and giant catalysts. On the whole, as a general rule of thumb, now I think there will be outliers. I think there will be exceptions to that rule, but kind of as a general rule of thumb, I think more often than not, the greater market will be negatively affected by a Bitcoin bear market, because that's what's always happened historically. So until I see evidence and confirmation of altcoins decoupling from Bitcoin, I will continue to operate under the assumption that Bitcoin will continue to lead the altcoin market, because that is what's always happened historically. I mean, even now, the altcoins didn't crash because the altcoins didn't all of a sudden stop, having use case. The altcoins crashed because Bitcoin crashed. So even now, in the near term, right now, the market is telling us once again, Bitcoin does lead the market. And so while I would love for altcoins to eventually decouple from Bitcoin and for Bitcoin to have no effect on them, I don't think it's going to happen anytime soon. And all the evidence kind of shows that that's what's been going on. And look, Messin, he agrees with me too. I think we just kind of have some kind of slight interesting differences of opinion. But I should probably let him speak for himself. But yeah, no, that's what's going on with that. Yes. So Christopher Hicks says, you guys who spend their time like aMillionortheMoon are great for the space. Thank you. Very kind. So yeah, he might be. What else are you guys saying here? Well, I think debates like these are very productive. They help settle all sides from points of views that are much smarter than ours. Yeah, guys. So I think eventually what we want to do here is we've been talking about this too. We should me and Messenger. We should both have a live stream where we both write down all our different kind of philosophies and opinions when it comes to investing in this market and hash it out, and also come up with our own. We're probably gonna do this maybe tomorrow, maybe the weekday, probably most likely. We're both gonna come up with a new kind of top 5 list to buy the dip on, and share it with you guys, and kind of talk about why we're choosing each coin. So that's something to look forward to, that we're hopefully gonna be pumping out in the near future. So yeah, you guys have that to look forward to. Bitcoin is dead. It's over. Sell it out. I don't know, guys. I don't know, man. Again, for me, it's your it's your investment horizons. If you're willing to hold till 2025, we're gonna make new all-time highs again, enterprise discovery. So, again, it's gonna suck. Like again, guys, if we assume the worst case scenario and we're in alts, are we really prepared to hold 3 years in a bear market while shit's going nothing but down? It's gonna suck. So just understand that that's a distinct possibility. Dennis Ergen says, what do you think about ICP? I like ICP. I've only started to learn more about it. I don't know a whole lot, so I can't comment a lot on it because I'm just starting to like learn about it. But from what I've seen, ICP is definitely an interesting project. I don't know if it's something I'd invest in because it's very high market cap. But ICP, for those who don't, is essentially trying to create like a whole new internet, whole separate internet. It made it super, super high in terms of the market cap ranking without me even like, without it even being on my radar much. So that's pretty interesting. But yeah, no, like I've only just started to learn about it. It's an interesting concept. Again, they're just fully trying to create a whole new internet, parallel internet, like a fork of the internet. So yeah, a very, very interesting concept, very high market cap. So again, guys, anything you like, look for to buy on the dip, and we've dipped quite a lot. So this is very, very interesting. That is a lot of dip, guys. And so also, just to share with you guys, what's my approach when it comes to investing here is, because there's so many good options, but what do you know what to buy the dip on? Well, just go to the first page of CoinGecko and then look for what's most down on the week, on the day. Synthetics is one I like. See it at the top 3 here. Internet ICP might be fine, waves might be fine, but synthetics is my personal favorite, kind of like the top 3 that are the most down. And so I would personally start dollar cost average into synthetics. And so maybe I'll start to share with you guys some gems that I'm buying the dip on. Why don't I do that? Do you guys want me to share some gems that I'm buying the dip on? Smash that like button if you do. So Dennis asks with $2 super chat. Thank you for the support again. Says, I think the next 2 days will be very telling. Yes, again, like I agree with you. Next couple days, next couple weeks are going to be extremely, extremely telling. Again, for me, I'm just more sitting on the sidelines, waiting for that more confirmation before I'm ready to call bull market or bear market with Bitcoin. At this point, I'm unconvinced. There's a lot of bearish things, a lot of bearish indicators, a lot of reasons to think that we're in a bear market, and then there's also lots of reasons that we're in a bull market. So I don't feel confident enough to call it either way at this point. I'm fully just waiting on the sidelines, and I need to wait for more confirmation. If we break below 30K, I'm gonna start to lean a lot more bearish. If we break above and hold 42K, I'm gonna breathe a sigh of relief and start to be a bit more bullish. So at the end of the day, I'm waiting for confirmation. There's no need to talk about feelings and intuitions. What we need is confirmation of the macro trend. Yeah. So Dzar13 says, LOL, how the hell do you think this is a bull market? Well, man, look, if you were just looking at price action, I would say, yeah, no, this is definitely not a bull market. Having a, let's see here, a 53% correction is not commonplace in a bull market. But it's times like these where you need to consider the fundamentals, not just the technicals. And so the technicals are obviously bearish, but the fundamentals have never been better. And so we're seeing a lot of signs that there was coordinated flood all at once at the weakest points. And I think what's happening is that the legacy markets and these institutions are waking up to what Bitcoin and crypto is and the return on investment potential. And they saw it run up. and they saw it was overextended, and they coordinated a FUD campaign to buy it at cheaper prices, which is what we're seeing. We're seeing over-the-counter OTC transactions increase for Bitcoin. The buys are increasing for Bitcoin. We're seeing large buys of Bitcoin below 40,000. We're seeing whales buy the dip, and we're seeing weak hands and noobs and retail panic sell at a loss at the bottom. So what we're seeing here is Bitcoin move from weak hands to strong hands, and this is textbook market manipulation. And this is a market where the institutions know there's insane ROI potential, and so they couldn't miss this boat. They couldn't allow the retail to win, so they're shaking them out. That's exactly what they're seeing. So because the fundamentals for Bitcoin and crypto are great, and because given based off not just one but a few cycle indicators, we seem to have topped off prematurely. So given the premature nature of where Bitcoin topped off locally and the fundamentals, I do hold out some hope that the bull run may continue. In that worst case scenario, what we may be doing is entering a 2013, 2014 cycle where we had a run up followed by a massive sell off and consolidation period, months of consolidation, and then one second kind of run up. So something like that might be happening 2013, 2014 scenario, or something completely new may be happening, guys. Just because things happen historically does not mean that they're guaranteed to continue to happen in that same way. So Bitcoin could be forming a whole new kind of cycle that we've never seen. And so that's something else we got to consider. And so because I believe in the long-term nature and I'm seeing signs that things are ending prematurely, I'm not convinced that this doesn't feel like a top. And I could be wrong, and this may very well end up being the top, but I think there's enough reasons that I'm not very convinced, and thus I'm still waiting on the sidelines to kind of be more sure of myself. Yeah, that's that. That's those are my thoughts. So Dennis S, again, thank you for the support, man. Dude wasn't there for like 50%. Dude wasn't there like 50% dip in 2013 bull market? No, yeah, exactly. And actually, if we go to if we look up BTC USDT, let's see, Bitstamp. The Bitstamp chart actually has the previous cycles. Let me see if yeah, right here. So if we go and look at 2013, 2014, this is it right here. So let's close all this stuff. Let's see here. All right, so where's this white line? Okay, here we go. All right, so yeah, this was 2013, 2014. So 2013, 2014, we had a double top scenario. So from this point to the drawdown, we corrected how much? 82%. Yeah, so, I mean, look, again, I think maybe something like this is theoretically possible. Now, there was a lot less money back in this market, so it's not exactly the same situation, but it has happened. Bitcoin has had this where we like seem to have completed a cycle, but then we're like, oh no, we didn't. We just all got shaken out, and there was a bunch of accumulation, and then we ran up again. So whether the bull market's over now or the bull market comes back 2025, whatever that the case may be, I think Bitcoin's gonna make new all-time highs again. So if you're willing to hold for the long term, like several years through a lot of dippage, then I think that your risk is greatly mitigated. I think one of the greatest risks when it comes to cryptocurrency is the unknowns, what you buy, and how long you're willing to hold. If you're willing to hold long term, everyone who's held solid coins over long term has made money. Everyone. The people who lose money are people who are short term minded. People who panic sell dips, people who expect to become millionaires in a month. No. The people who made money bought dips and held it forever. Those are the people who made money in crypto. People who FOMO'd into crypto halfway through a bull cycle and bought the top on shitcoins and sold the first major sell-off don't make money on crypto. Those people are always the people who lose money. The people who make money are smart money. Smart money buys dips. Smart money finds undervalued things and holds it forever. And the people who find undervalued things, buy dips, and hold it forever, those are the people who make money. Not people who FOMO into a doge that's dumped, that's pumped 50x and then sell the first sell-off. That's not how you make money. So that's that. Yeah. So David here says, isn't it true that it used to be the case that you needed to own Bitcoin to convert in enable to purchase altcoins, but that is not the case these days? Yeah, no, look, yeah, that was the case. So before there were stable coins, before there was an intermedium, you'd have to buy Ethereum with Bitcoin. You'd have to buy Chainlink with Bitcoin. Yeah, but now that they're stable coins, it's honestly taking away a lot of the use case for Bitcoin. At this point, like, if Bitcoin was created today, it would be nothing. The only reason why Bitcoin's great is because it was the first. And it started the whole cryptocurrency revolution. But Bitcoin was the first cryptocurrency that established blockchain technology. And so, look, there's tons of great reasons to be nostalgic and love Bitcoin. But, I mean, today, there's a bunch of better options, such as Ethereum. So, excuse me. That's that. Excuse me. So I was supposed to share with you guys some gems that I'm looking at before I wrap up this live stream, because I've been going on for over an hour here, so I can really rant, can't I? But before I wrap up, I want to share with you guys some gems that I'm DJing out and buying the dip on, because enough of this FUD. Fuck this FUD. I ain't buying it. I'm buying the dip. And so one of the things I'm buying the dip on is Mercurial Finance. MER. What is Mercurial Finance? Mercurial Finance, the easiest way I can explain it, it's like the Curve Finance of the Solana ecosystem. So, excuse me. Something I've been doing right now in terms of kind of narrowing my my attention on what to buy the dip on is a few things. So I'm going through all these different layer one smart contract blockchain ecosystems like Ethereum, like Cardano, like Polkadot, like Kusama, like Zilliqa, like Solana, like Harmony One. And what I'm trying to do on my own time, this is what I've been doing, is I'm trying to find the major sub niches in each one of these blockchains. I'm trying to find what are the major oracles, swaps, NFT projects, DeFi projects in each one of these ecosystems. So I went to Solana and I said, what's interesting in Solana? It's specifically in DeFi, because I think DeFi is one of the greatest use cases when it comes to crypto. And so specifically with the Solana ecosystem, I found three really interesting projects that piqued my attention. Oxygen, Ramp, all DeFi projects, and Mercurial Finance. And I liked Mercurial Finance best because it was the newest and lowest market cap. So, folks, if Solana is going to stick around, if Ethereum is going to stick around, if Cardano is going to stick around, then each of the major Oracle projects, DeFi projects, NFT projects, swaps in each of those ecosystems are likely to stick around and do well as well, right? So if Solana is here to stick around, then DeFi Solana is here to stick around. And when in terms of DeFi, when it comes to Solana, Mercurial Finance is one of the most interesting picks on my radar. Because again, when it comes to the DeFi picks, there's like dozens and dozens in the Solana ecosystem. I found what I thought were the three most appealing. And out of the top three, Mercurial Finance was the most appealing out of those top three. Because again, it was the lowest market cap. So this thing, I believe, is in its very early stages. They haven't even really launched their application yet. But again, just to simply explain it, they're trying to be the Curve Finance of Solana. So low market cap, 48 million. Even if we're entering a bear market, I think this is something that next cycle is likely to survive a bear market and do well. And something to understand too, these staking projects, these DeFi projects, are very likely to survive a bear market. Because what do people do in a bear market? They move into stable coins and trying to earn yield. And how do you earn stable coins? You go to lending and borrowing protocols and yield farming protocols. And what is Mercurial Finance? It could be one of the major DeFi players of the Solana ecosystem. So if Solana is here to stay, then Solana DeFi is here to stay, and Mercurial Finance is one of the most interesting plays in Solana DeFi today. So I've started dollar cost average. That's one of the most interesting plays to look at. And honestly, I'm barely going to do any technical analysis on this because I don't expect to make money on this anytime soon. This is for me. I'm starting to dollar cost average. For me, this is like a next cycle play. I've only just started to buy. If it dips more, great. I'll just buy more. It's down 55% from all-time highs. And while we could correct another 30-40%, We could even pump another 30-40% if the market recovers. So for me, I'm just starting to get that bit of exposure. And so Mercurial Finance is a very, very interesting play that I think should be on all your guys' radar. And guys, look, I showed a couple days ago. So guys, if you like this kind of stuff, become a VIP Discord member. You get access through our Patreon. And I keep saying this because it's true. We're going to be making changes here in the near future to our VIP Discord group to provide even more value to our members. And once we implement these changes, the people that got in early will greatly benefit from being in early. And I don't want to share details because I don't want to promise things I can't deliver on. So me and Messin, we're both working behind the scenes to try and understand how to implement things, what we can promise and what we can stick to, and trying to understand how to practically implement the things we're working on. But basically, big changes coming soon. People who got in early are going to benefit greatly from being early, and there's even more value coming to our members. So I'll stop shilling it, but become a VIP Discord member, get access through our Patreon, link for that down in the description. So that is that. And guys, just they get the stuff we buy first. It's much easier to make to type something up, type up a sentence like, "Hey, I'm buying Mercurial Finance. This is why," than making a live stream or making a video. It just takes a lot longer. So our VIP Discord members get that access first, what we're buying first, just because it's much quicker to let them know. And we also talk to all our members regularly. So yeah, so that's that. Dennis S, again, thank you for all the support, man. You're awesome. Dude, your channel is way better from Carl from the moon. Well, I appreciate that. That's very sweet of you to say. That's thank you for that. Yes, man. Look, again, our hope is in making this channel is we want to be the best combination of technical analysis and fundamental analysis. Because what you see a lot on YouTube is either all 100% technical analysis, all 100% like news, or all talk about like kind of fundamentals in projects. We want to be kind of like the best combination of all three of those things, because one alone, it's lacking. You want to have a super solid understanding of technicals and fundamentals, and if you have that, then you're well positioned to succeed in this niche. And you want to have that because crypto is the fastest growing asset class in the world, highest ROI potential, again maybe paired with the highest risk. But if you have that and an understanding of technical analysis and fundamentals and the news, and also, by the way, we're not sharing this much as we're in the very early stages, but we're also trying to learn blockchain development. Like we're both trying to learn, me and Messin, Solidity in programming on the side as well. We're taking a few courses. So again, that's probably going to take us months, if not years, to get good at, but we plan on sticking around. So folks, stick around with us, because bull market or bear market, crypto's here to stay. Money's gonna, potential is here to stay, and we're just starting. You guys haven't seen anything yet. Our knowledge in the space is only just beginning. We cannot wait to be the masters when it comes to technical, fundamental, and also technology analysis in the space. So stick with us, guys. So another one that I want to show you guys is Armor Finance here. Wow, it's late. I just checked the time. So Armor Finance. Armor Finance is a insurance protocol that pays you in their token for buying insurance. Have you guys ever heard of the insurance protocol who pays you for buying insurance? Now you have with Armor Finance. So for me, again, I don't, this is a long-term hold for me. I don't plan on making any money anytime soon. If I do, great. If this thing pumps 50%, I'll probably take some profits just because of the state of the market, but I'll keep a majority of my position. And the thing I like about this is a few things. As more people move into DeFi, and more value gets locked in DeFi, insurance is going to become more and more attractive. This thing is down 78% from all-time highs. What's the worst case scenario? We fall another 10% from all-time highs? Folks, the worst of what is possible already happened. This is a super solid project, and we're also sitting on support right now. We touched support, this white trend line. We're like 5% away from support. So super solid project sitting on support that has 78% down from all-time highs, when there's a distinct possibility that the bull run may continue. Come on, guys. Like, come on. I've been buying the dip on this thing, not to mention that gas fees on Uniswap are like insanely low right now, like $15. You could maybe even do it through Polygon, probably be pennies, or do it from 1 inch. Anyways, guys, regardless, gas fees are the cheapest they've been in it feels like months at this point. So Armor Finance, super solid, low cap. I believe last time I checked, it was like 40 million, something around there. I think over the long term, whether it's this month, this year, 4 years, I think this thing is going to be tens of dollars one day. Whether that's a year from now or 5 years from now, I don't know. But for me, this is a long-term investment. I think cryptocurrency is fundamentally undervalued, and this thing's down 78% in a fundamentally undervalued market with insane growth potential. So, I mean, well, of course, this thing could go down some more, but I'm sure shit buying right now. So that's that. That's Armor Finance. I don't know if you guys got any questions about that. But yeah, so David here says, everyone hit the thumbs up. This dude is giving current information, looking out. Yeah, again, guys, easiest way to support us is to smash that like button. The more likes we get, the more likely YouTube is to recommend the channel, live stream, and our videos. So easiest way to support us. Highly appreciate it if you smash that like button. MATIC ain't scared, and ye bots get it too. Keep going, boys. Yeah, so I'm definitely buying this tip. And so if you want to know how to buy tips as well, we're having this impulse. Where do you know where to buy? Well, what I like to do whenever we have an impulse is draw a Fibonacci retracement from the bottom of the impulse to the top, and that gives us some support/resistance levels that are likely to be relevant. So I've been saying to our members and in the live stream the other day that I'd be buying here between kind of 46 cents and about 41 cents. And yeah, that's exactly where we fell to, right here on our base of support, right here at kind of 43, 44 cents. We're holding support on the 0.5. We may very well fall some more, but right here is literally where I'm buying. So that's that. Now, moving on here, synthetics. Guys, synthetics, SNX is the leader in the derivatives ecosystem. So guys, derivatives, they're fancy trading instruments, fancy options, fancy leveraged investment tools. And so in the legacy markets and stock world, derivatives is stupidly bigger than the trading of underlying assets. Now, I think I retweeted something earlier. Let me go to my other screen here. Let me see if I can find it. No, maybe I didn't. Yeah, no, I didn't. Anyways, I found this really great example comparing the size of the derivatives market to the size of the trading of the underlying assets. And just understand that derivatives are like stupidly much bigger than the trading of the underlying assets by like several orders of magnitude. And so if crypto is to mature as an asset class, and if crypto itself is undervalued, then what could derivatives do if derivatives are bigger than trading of the underlying assets and the underlying assets are extremely undervalued? So synthetics, being the leader in the niche, is like the safest play when it comes to it. And you could also earn like 13, 14, 15% interest, APY, on Celsius. I'm staking my synthetics on Celsius, earning like around 14-15% compounding interest. It's paid out weekly and it's compounding. So you imagine buying synthetics and just leaving it in that wallet for years, 3, 4, 5 years, coming back after earning weekly paid out compounding interest. I mean, come on, guys. Like, there's so much opportunity in crypto. And so I like synthetics a lot. It's down a lot. It's still respecting this descending channel. And as long as we hold the line here, as long as we don't break below $10, we're still within this channel. And this could end up being the mother of all bull flags as long as we hold the line and basically don't dip below $10. We're down 63% from all-time highs. Again, the worst of what's theoretically possible already happened. And this is a very solid project in my opinion. And we're still holding the line here. So as long as we continue here, as long as we kind of hold 10, I mean, maybe even above $8, as long as we hold this channel, then a bullish breakout could look like a bull flag. And that bull flag could bring synthetics from $40 to $45. So very bullish on this thing long term. Whether the end of the cycle is here or we continue, I think it's just a matter of time before this thing reaches its all-time highs and enters price discovery. Very bullish on that thing long term. Now, I think kind of the last thing I'll leave you guys off with is Terra Luna. Terra Luna, guys, Terra Luna Payment Solutions, creating some stable coins. This thing I like a lot because in terms of solid projects, this thing is down quite substantially. So if we go to the first page here, Terra Luna is among the coins that are down the most on the week. Not quite so much as some of the other ones, but it is down quite a bit. So if you are looking for kind of coins that are down a lot, again, what I like to do, go to page 1, see what's down the most that you like. And so Terra Luna was one that was down a lot that I liked. And so if you go over here, what's on page 2 that I like? Nothing. Oh, Alpha Finance. I like Alpha Finance. Down 20% on the week. We go over to the next page here. Let's see what's down on the week that we like. Perpetual Protocol. I like Cards. I like Anchor Protocol. I like. And so Anchor, that's another one, guys. So Anchor, you can stake and earn 18 to 20% APY on Anchor Protocol. That's insane APY. So again, Anchor Protocol is one of those coins that's, by the way, native to the Terra Luna ecosystem. So the Terra Luna blockchain is a totally native blockchain. So Anchor Protocol is native to the Terra Luna blockchain. And so the way you earn that 18-20% is on UST. UST is a stable coin native to the Terra Luna blockchain. So UST, Anchor Protocol, Terra Luna, all the same blockchain, all the same ecosystem. So Anchor Protocol, again, earning 18-20% APY, stupidly high APY. I bought the dip here at kind of $4. I'm buying the dip here, and I plan on using this protocol to stake stablecoins and earn 18-20%. And so, guys, again, between like Celsius Protocol earning like 8 and 10% on stablecoins, 15 to 13, 14% on MATIC and synthetics on Celsius, and then Anchor Protocol earning 18% on stablecoins, and then Sushi earning 20% on stablecoin liquidity providing and you get in addition Sushi and MATIC Polygon. There's tons and tons and tons of staking opportunities to earn yield. So even if you're not like investing in layer ones and in altcoins, you could still be earning crazy money just through stablecoins, like 15-20%, even more through some staking mechanisms. So there's plenty of opportunity in crypto. Make sure you stick around, like, subscribe, comment, share, hit that bell icon, and notified of new uploads. I think that's pretty much most of what I wanted to talk about. So unless you guys got any final questions here, I think I'll start to wrap up because I have been going for nearly 2 hours at this point. So guys, I think I will wrap up. It's getting late. I want to live stream tomorrow for you guys. So I think I'm gonna start to wrap it up here. Again, guys, I'll just take the opportunity since we're wrapping up to just shill our VIP Discord group again. I'm not just gonna delve too much into it, but guys, if you want to join it. Link for that is down in the description below. Check out Tani, the channel sponsor. It's kind of an exchange aggregator. I like it, especially for their tax features, because once it comes time to do taxes, we'll just click a button and it prints out a tax form for you. So a super easy, free exchange aggregator that we're using. So make sure you check that out. And also stay tuned to this channel because bull market or bear market, we're here to stay. Crypto's here to stay. And while you can make money in the bull market, the bear market is where people truly make life-changing wealth. Because while it was great to buy, ETH at maybe 2K and ride it to 4K, would it not have been so much better to buy ETH at $200, $100? That's the kind of opportunity that a bear market gives us. While if you're hodling from the previous cycle, bear markets suck, it actually gives you plenty of opportunity. Could you imagine buying Ethereum at $100 and having sold it at 4,000? Again, guys, if we do enter a bear market, there's going to be super solid altcoins at dirt cheap prices. So I cannot wait to share with you guys what we find interesting if we do indeed enter a bear market, or how the market is going to play out if the bull market doesn't need to continue. So at the end of the day, just stay tuned, like, subscribe, all that good stuff. Folks, thank you so much for watching here. Thank you everyone for your support, all the kind words, all the great questions. Yeah, guys, until tomorrow, take care.